Welcome back. Well, thanks for staying with us on CNBC-TV18. For now, the market is looking skittish. It's down about 80-odd points and getting worse. Holding on still to that 100-day moving average. So let's see how things go through the course of the day. As we kickstart the earnings season today, it's our special segment, Quarter Se Quarter Tak. We talk about pharma and healthcare. Ekta is here to give us the expectations from this space. Ekta, over to you.
Thanks for that. Well, pharma companies are likely to see around a 9 to 10% growth in Q3FY23. Growth is expected to be driven by the domestic market, which is estimated to grow around 10 to 13%, with around 5% growth in volume and up to around 7% growth in prices. Now, for the US markets, expect continued price erosion in mid to high single digits on a year-on-year basis. Margins for pharma companies could remain flattish on account of continued elevated cost base as well as price erosion in the US. Now, for example, Lupin is likely to benefit from sales of the bowel drug Suprep. Companies like Lupin, Zydus, Ajanta and Natco could gain from sales of Tamiflu generic due to the US flu season. Dr. Reddy's could see lower sales from Revlimid generic, the cancer drug, as it front-loaded its volumes in the previous quarter in Q2FY23. Sun Pharma is likely to continue benefiting from sales of its specialty drug franchise. Alchem is likely to continue seeing pressure in terms of margins. Estimates are up to a 500 basis points year-on-year decline in terms of margins, something that we saw in the previous quarter as well. Commentary on remediation measures by Glenmark, Sun Pharma, Aurobindo's pharma injectable business and Biocon's integration of Viatris will be watched closely. API companies, they could benefit from a recovery in demand and better realizations on account of price hikes. Margins for API manufacturers are expected to improve due to lower input costs as well as freight costs. Watch for a recovery in Divi's Labs margins from a multi-quarter low that it hit last quarter. Estimates are of around a 50% year-on-year growth in Loris revenues driven by ARV API business. Lastly, for healthcare companies, Q3 is expected to be slow as it was the festive season. Hence, overall elective surgeries for hospitals and testing for diagnostic labs would be lower. However, occupancies and average revenue per bed will be supported by larger factors such as pent-up demand for electives, higher awareness in terms of healthcare, and increased medical tourism. For diagnostic companies, impact of competition on margins will be watched. Apollo Hospitals' fundraising plans for its digital arm, Fortis's open offer, Medanta's first quarter as a listed company, and Metropolis's reaction on income tax searches will also be something which will be watched quite closely.
Thanks a lot, Ekta, for that. That's the entire healthcare, hospitals, pharma space and how to approach it.